Good afternoon and welcome to today's ISAS seminar on the Indian economy and expectations from the Union budget. We are barely 6 weeks away from the next budget, the second budget of the Narendra Modi government, and this budget is being looked at with considerable expectations and eagerness for a variety of reasons. One of the reasons is that there is this larger view that when the Modi government presented its first budget right after getting elected during May last year, the budget that came out was more of a please all kind of budget for all constituencies. So it was a more political budget than an economic budget, whereas the real economic stuff in terms of policy is expected to slowly start getting reflected through the budget that we will see now. It is also true that this is a budget which is being presented in a macroeconomic backdrop, which hardly has been better for finance ministers in recent times. The external economic environment is very conducive. The oil prices have come down. Domestically, inflation is at a low, kind of a historic low. The business expectation surveys that are being done across the country are all showing optimism about the growth of business and economic activity in the coming months. However, having said all that, there are also reports that are coming out from various sections, including major sections like the Ministry of Finance, which actually point out that not everything is as rosy and hunky-dory and as bright as it appears. Particularly the public finance appears to be a source of concern, considerable concern. So what can one expect from the budget in this kind of a backdrop, given the fact that this is obviously an opportunity for the current government to put in place long-term economic reforms and policies, many of which have been talked about but have not been implemented. Also to go back maybe to the path of fiscal consolidation that was abundant 3-4 years ago. Now to talk about all these, the policy expectations, the course of economic reforms, the larger economic context, and the issues concerning the Indian economy, we have Dr. Narayan. Most of you know Dr. Narayan, and I will just take this opportunity to point out. So I have to introduce you. Okay. Okay. I will introduce you, sir. In that case, I mean, this he has a very elaborate introduction. I will not get into the sort of the basic details, but I'll just point out that.
10 years ago.
Yeah. I think, so you were involved with 4 budgets, right, if I'm not mistaken? Yeah, so 4 budgets, and I happened to be in the finance ministry then on all 4 occasions, and we used to look up to his room in the North Block as a most mysterious place. Much of the mystery now no longer remains. We know what used to happen in bits and pieces. But he is obviously somebody who knows the budget-making process better than anybody else in the country. He knows the pressures that exist on policymakers at the time of making budgets. And he also knows the macroeconomic context, particularly the public finance sort of dilemmas that the finance minister and his team faces at the time of preparing the budget. Dr. Narayan has been with ISAS for a very, very long time, and he was the head of research till recently, and he is also a very important member of the trade and economics program that we have at ISAS. He now spends most of his time in Chennai advising a research and consultancy firm, apart from various other corporate and other engagements that he has. So, sir, I hand over the floor to you now. Shall we look at a 30 to 40-minute presentation?
That's a lot.
Thank you.
That's a lot. Thank you. Thank you, Amitindu. This morning at the our weekly meeting with the chairman, most of you, a lot of you were there. I think a number of issues which are facing the Indian economy were discussed, I would say discussed in passing. And one or two of the thoughts which came up in the morning would kind of help me set the background for what I'm going to say now. And one of the more important things is that this government has been in place for about 7 months now. And this is the first full year budget that they are going to place before the parliament. The earlier budget, which Mr. Jaitley placed before the parliament in July, was criticized as being just a continuity of the Mr. Chidambaram's budget. So in a way, he didn't have an opportunity to make what can be called his own budget, and this is his first opportunity. The second change is that in this interregnum, BJP has captured 2-3 more states, has formed government in collaboration in Maharashtra, seems fairly strong position even in J&K, and the Delhi elections would be over by the time this election goes place. So in a way, the footprint of BJP across the country is much larger than what it was at this time last year. And this, incidentally, was one of their basic, I would say, political agendas to enlarge their footprint as quickly as possible. It helps them later in the Rajya Sabha. So that is achieved. So in a way, and after this February elections, the next elections are only Bihar in November, December, and Bihar is a different ball game altogether. So I think they have a whole year to do whatever they want to do. The third point is that they have now economic advisors in place. There's Mr. Arvind Subramaniam in the ministry. They have Mr. Panigrahiya. They have Mr. Vivek Devroy in the Niti Aayog. So they have, which they didn't have 6-8 months ago. So in a way, the ideology of these economists would certainly be present in some form or the other in the budget. Finally, people are a little anxious, little restless about what exactly this government is going. They have been quite happy with the kind of announcements that he has made, kind of statements he's been making, the forays into foreign policy that he has done. But in effect, there is a little bit of disquiet about performance. And it's not clear what is the direction of his economic performance. And I think this budget, therefore, people are looking forward to that definitive statement of performance and implementation. They're looking forward to it. What I propose to argue that perhaps it will not roll out in the way in which the whole of the country is expecting, and I'll try to argue the reasons why it will not roll out in that manner, and still point out the positives that will come out of the budget. You see, the Indian budget is a kind of a, what shall I say, a Rajinikanth first day show, in the sense that a lot of people expect a lot of things on the first day. But maybe after about a week or after 10 days, maybe it wears out. So I want to know whether this budget would be the same as what happened to Rajinikanth's Linga, or whether it will continue. So let's start with, I mean, I have a presentation. Numbers are, I would say, a good framework to start with. So I would start with some numbers of what is happening in the country now. And then I would like to talk about the room that is available for the finance minister for the budget. And then finally go on to what he can do with the kind of space that he has. Okay, I can't look back. So no, it's okay. I have it in front of me. The high of the GDP growth was obviously 2010-11, when we touched 10.25. It's come down to 6.33. Now, for the current year, there are all sorts of predictions. 5, 5.5, 5.25, all sorts of predictions. But what is clear is that it's better than last year. 4.73 last year, it's better than last year. How much better we will have to see. But certainly there is a move which is at least marginally upward. On the quarterly figures, of course, we have figures of the September quarter here, but the December quarter figures are not yet out. But the December quarter again is around about 5.4, 5.5. Different estimates, 5.5, 5.6 kind of estimate. So certainly this year will end up better than last year, above 5%. How much above 5% we don't know. Hopefully close to 5.5, maybe not, but between that range, 5 to 5 and 5.5 would be. So there is a box at the bottom which says probably 5.3 would be a reasonable kind of an estimate for the current year in terms of GDP. This is a graph which I would like to go back to later in the presentation for making 2 or 3 different kind of an arguments. And this describes the change in the composition of the India's GDP. And what I might like you to note is that the composition of the blue, that is the agriculture and allied industries, has come down in the last 10 years substantially. And the composition, the contribution of the services sector has gone up very substantially. Now the point that I would like you to bear in mind as I go on is, if you take the agriculture sector and the services sector, how much impact can the budget make? And then I'll make these arguments later. The impact of the budget is substantially more on the industry, manufacturing, mining, electricity, and construction sectors. And that has certainly not grown. I mean, it grew for a while, but you get a very kind of a smaller figure when you look at the current years, which means that the services sectors expanding substantially. And a small corollary here, if you look at the figures of employment, the NSS data for employment, the last 5 years, the largest growth of employment has been in the informal sector, and even within the informal sector, in the real estate, construction sector. So which points to growth of more casual, less continuous employment. So if the real estate sector falls, this employment goes away. So in a way, if you think of it in large terms, you can think of large-scale labor mobility happening from the poorer states to the richer states, happening towards the real estate sector, towards construction, low-skilled jobs, etc. Adding value certainly to the internal transmission of economy, internal transmission of money from the richer states to the poorer states through this labor, but at the same time raising the question of the sustainability of this employment. And if the real estate sector is not propped up at this present level, this entire employment becomes at risk. I mean, that is a thought on the aside. And that is one of... Yeah, that's right. Sectoral composition in INR billion. Yeah, that's what it says. Yeah. Interchange, is it? Okay. Take the percentages.
No, I'm saying 2009, 10 and 13, 14. The INR billion is interchange.
Okay. I go on to the next one, which is the IAP figures. And these IAP figures have come out in many magazines, etc. And you can see that last year, the IAP growth rates have been negative, whereas showing a marginal positive during the current year. But still compared to 2011-12, far below 2011-2 figures. the monthly figures of IIP have been fluctuating fairly substantially, except that even after May, the figures have not necessarily been on a significant upward trend yet. The December figures, they say, have been better. I don't have the numbers here on the December figures. But overall, the picture is, I mean, I wouldn't say a picture of great growth yet on industry. The next picture is on prices. Certainly, the growth rates of the CPI have been coming down, and they are down to close to 5% in December. Of course, it's a large base effect. That means they've been very high. So we are talking of growth rates of CPI, not CPI in absolute terms. But certainly, the rate of inflation appears to be dampening and likely to dampen in the coming year also, which would certainly help the government in planning for its expenditures. Then next we start looking at the budget figures. And there you would find that first is, if you look at the gray lines, you would find how the expectations of revenue have gone up enormously in the last 2 years. But the actual realization of revenues between 2012-13 and even the RE 2013-14 have been considerably more conservative. There's a strong argument which is being made by the government in the midterm economic survey, very strong argument, that the revenue projections of 2014-15 has been overestimated by 1 lakh crores. Now here, this is a Government of India document. So the question is, why has there been an overestimation? Who is to take the responsibility? It's very easy to argue that it was the previous government's budget and the same numbers were carried forward. Then always there is a question, why did the new finance minister not correct these numbers? And why did he choose to, I would say, hang this heavy chain around his neck when he made his budget? Because today he is faced with a very difficult proposition. Up to the end of November, already he has touched 98% of his fiscal deficit figures. That means he has got 4 months to go with only 2% room for his fiscal deficit targets. Revenue collections have actually, since IAP numbers have been lower, revenue collections have certainly not even gone up to last year's increases. Last year you had 13 to 15% increase in revenue. You're not even getting that. The other thing is, with a larger inflation, in fact, the denominator of the GDP increases, and therefore your fiscal deficit appears to be a little lower. Even with the inflation falling, even this is not a room which is available to him. So he is going to be extremely hard put to meet the revenue targets, and this has a double cascading effect. One, of course, is that the fiscal deficit figures become so much more difficult, but much more significant, the state's position worsens because a substantial portion of the revenues received are passed on to the states. And if you don't collect, that means the states get worse off. If the states get worse off, they are going to borrow more. You have 3 states today, that is West Bengal, Punjab, and Kerala, which is practically teetering on the brink of bankruptcy, these 3 states. And if the central transfers are substantially less than what they've anticipated in the budget, they are going to be very much worse off. Last year, West Bengal paid 28,000 crores in interest alone on the debts that they had borrowed from the center, which is huge, which could have been used for much better purposes. So seriously, states' finances, some of the states get stressed as the revenue receipts decline. So this year, going forward, the next 2 months, actually just has 1.5 months before he presents the numbers, is going to be extremely difficult for him, so he's pushing very hard on the selling of stakes in the public sector undertakings. He's pushing through the auction for the spectrum, new spectrum, 700 and 2100 megahertz spectrum, which everybody has to bid for because again the footprint is enlarging. So he's hoping, very much hope against hope, that he would be able to collect at least 50 to 60,000 crores on this. The selling of shares, the good part of it is because of the buoyancy in the stock market, LIC has been able to get rid of a lot of shares that it's been holding in the past. They have a strong kitty of 50 to 60,000 crores of cash available with them, which they can put into the buying up of these PSU shares, which means that, okay, if he wants, he can just swap this. He can ask LIC to buy these shares and then at the same time make the money for the fiscal deficit. So his fiscal room is getting constrained by the numbers he has put out in the parliament, as well as the low revenue receipts, the poorer than expected growth, and the kind of pressure that is being exercised by the states. Again, on an aside, on a sort of loop line, he has to factor in the coming year the report of the Finance Commission, which has just given its report. The Finance Commission gives a report once in 5 years about the money to be shared, revenues to be shared between the center and the states. And the current report, though it is not yet accepted or fully published, appears to indicate a much larger transfer and a much larger financial responsibility to the states, which will constrain, again, his ability in terms of budget making, in terms of flexibility of use of finances. The next sheets is I've already talked about this. The receipts and expenditure performance up to, this is from the CGA, up to November. December, the latest figures are out. And you can see that the estimate, the achievement against performance, the yellow against the gray, is quite low, much lower than even last year. So is also expenditure. He's curtailing expenditure, but still the worry is that if he's only 43.40% in December, where is he going to go by March? So we then move on to the big game, that is the revenue and the fiscal deficits. These are the targets. He would like to reach 4.1% by the end of this year and move on to 3.6, 3.7% next year. And now there is an argument which is starting. And that argument that is starting is, your IAP numbers are not good. You are not seeing enough capital formation and enough investment happening in the economy. So is it not time that you give up this target of fiscal contraction and actually go forward and make some public expenditure which will energize the economy into fresh investment, fresh consumption, fresh savings, whatever. And at this point, the question that he would probably ask himself is, okay, If I go in for fiscal, remember we went in for a fiscal expansion in 2008, 2009. But that fiscal expansion was purely driven towards consumption expenditure, write-off of agricultural loans, more NRG, AGA, etc. And fiscal deficit went up enormously without necessarily fresh investment, fresh capital formation. So what would he do if he were to say, okay, I'm prepared to put away 100,000 crores into fiscal expansion, where would I go? And then you start wondering what would be the kind of investments which would give him in the short term. Remember, he has 1 year. At the most, he has 2 years for this fiscal expansion to kick into GDP growth. So what are the kind of things that he would be able to do? And then you start realizing that probably his options are fairly limited. Because the infrastructure project, if you're talking about power, if you're talking about roads, if you're talking about rails, etc., they are already stuck up in a number of public-private partnerships, problems, etc. The one area which is not stuck up is railways. Okay, so he could put in a lot of money into railways, to building all these corridors that he's talking about. He could put it into ports. Some of the ports are still available for him to invest into. But defense, he could put it into a lot of defense manufacturing units, put a lot of money into defense manufacture, improve the ordnance factories, improve HAL, etc. Public sector undertaking making power equipment, he could put it into BHEL, into NTPC. If he did that, then perhaps he could be hopeful that, okay, quick capital formation in 1 year or 2 years. Attendant investment, attendant downstream effects would be possible. So I would say this is this is just a debate at the moment. I mean, nobody has come forward and said this is what it should be done. We'd be looking to what Mr. Panikaria says, what Mr. Vivek Devaraj says, what Arvind Subramaniam says before this issue is settled. But I think this is a balloon which is at the moment, as on, let's say, 15th of January, up in the air, that should he be doing fiscal expansion, or should he be continuing on the road of fiscal contraction? And the answer is not yet there. On the monetary side, Reserve Bank has already given an indication that its expectations of inflationary upsurges are lower here. That means it doesn't expect. And the reason is that I think by and large people are agreeing that oil prices will be 50 to 70 in the next 1 year, and that commodities are not necessarily going to go up, that coal is going to be $50 to $60, that iron ore is going to be $70 to $90, copper is not going to go up. Okay. And these are the big importing things so far as India is concerned. So this is going to be fairly under control. You already brought the petrol prices to market prices, you brought the diesel prices to market prices, you've come up with a solution for LPG. Therefore, a subsidy bill is something that you can talk to now. Earlier, the subsidy bill was talking to you all these years. Now you can talk to the bill and say, behave. And I think this is something that is a big achievement for this government. Fortuitous, but of course a very big achievement for this government. The other big achievement, fortuitous, again, which would probably help capital formation, is that the stock markets are going to remain high. Why are they going to remain high? Again, very simply, there's about 1.7, 1.8 trillion dollars of money, which is, so I would call the Bernanke money, which is sloshing around the globe, of which about $450 to $460 billion has come into Southeast Asia, out of which perhaps only about 20 to 25 billion has come into India. So you can see what a small portion of the total money which is moving around is coming to India. But this $25 billion is able to push up the market, push up the asset prices, because even $500 million trade in a day is able to push up the benchmark numbers of at least 20, 30 stocks, and that's what keeps it going. So this will go on. If this goes on naturally, then there is more enthusiasm for I would say even the local investors, retail investors get back into the equity market. There would be more enthusiasm to people to participate. Mutual funds would do better. Certainly more liquid funds would be available within India. And hopefully these liquid funds could get deployed into entrepreneurship, into capitalism, into construction, into manufacturing, into the real economy, not just the financial economy. So these are all the positives. But then I come to the question, what is his leverage over these sections of the economy? And that is where I would say, serious doubts now, because I do see that the economy of 2014-2015 is very, very, very different from the economy of 2002-2003. And how is it different? I would say 3 or 4 specific things. One is the slowdown in manufacturing, particularly after 2009, has moved so many jobs to the services sector that the informal services sector constitutes a huge amount of the total employed. And a lot of this informal sector is unfortunately substantially becoming cash economy. They get paid in cash, they get remittances in cash. If you take a state like Kerala, which last year got 45,000 crores worth of remittance money, and that goes into individual bank accounts, goes directly into consumption, and very little goes into, consumption of the form. Okay, if they are buying cars or if they're buying houses, at least I can say it's contributing to the real economy. But if they're just going into gold, and if it's going into marriages, and it's going into tours to the temple or whatever it is, then the kind of multiplier that this kind of money has is becoming smaller and smaller. And this cash money is substantial in the last 4 or 5 years. Secondly, agriculture. It's very surprising that this government has not talked anything about agriculture in the last 7 or 8 years. And there's a lot of crisis that's going on. Cotton prices have fallen substantially. We have a huge cotton crop. And why? Because China has stopped buying, or China has hoarded a lot, which is selling, whatever it is, we don't know. China is the cause of the drop of cotton prices. We don't know. Sugarcane. The whole of Western UP, sugarcane growers have not been paid for over a year. Okay, everybody is blaming each other. Government is blaming Mayawati, Mayawati is blaming Yadav, whatever it is. But those farmers have not been paid for a year, year and a half. This year, minimums, for the first time in 3 or 4 years, minimum support prices of rice and cereals have not been raised, which means the prices remain same as, and remember, this is the year we've been having 10%, 12% increase in costs. So wage costs have risen, particularly in NREGA, so many different reasons. And therefore, the cereal farmers this year are getting much less take home than they did even last year. Coupled with that is the fact that the Food Corporation of India has sold a substantial amount of its stock of rice. And therefore, there's a lot of, as of today, as we speak, there's a lot of rice which is unpicked, not yet picked up in the mandis of Punjab and Western Uttar Pradesh. And this government has not said a word about agriculture. Now, if you see, agriculture, of course, now forms only 18-19% of the GDP, but let's not forget about 400 million people depend on agriculture. So you can't form a budget which says, I don't deal with these 400 million people, I don't talk about it, I don't have anything to say about them. And again, if he has something to say, what would he say? The previous government at least pushed MSP on a regular basis, pushed government procurement on a regular basis, fiddled around with import and export in a manner that at least those sections which were affected in a particular 1 year to year, importing tur dal, another year we're exporting cotton, I think is very alive to the agriculture production scenario. But that we have yet to see, and that is another area that he doesn't have a handle on. So he doesn't have a handle. He doesn't have a handle on the financial market, doesn't have a handle on the services sector in the real estate, doesn't have a handle on the agriculture sector, and therefore I would just like to conclude by saying that what the public expects of him, like GST, a better tax rate, more investment allowances, lowering of interest rates, incentives for manufacture, etc., will all sound extremely good, will all be there, will be extremely good. But in terms of working themselves out into a multiplier for the economy during the current year, I would like to hesitate and put a question mark. Thank you.
Thank you so much, Dr. Narayan, and maybe we will follow the usual ISAS seminar pattern of taking questions in a group, maybe 3 in a group, and if you'd kindly introduce yourself while asking the question. Yes, Vikram.
Thank you. Very quite fascinating presentation. Do you need this? Okay. Just a couple of questions I have. I think something interesting you mentioned was the impact of budget measures is much more on manufacturing. Now, why is this the case? Is there a sort of policymaker bias towards manufacturing? Or is it just in the nature of the budget, that's how it is? And what can be done for services, given its importance? Should I ask another one?
Yeah, maybe you can take your 2 questions. We can go with.
Okay.
Or would you like to respond?
Okay.
The other question I have is the external environment. I think one of the things that's happening is that the U.S. dollar is likely to strengthen, already has, and likely to go even more. And I think this raises the question of the dollar-denominated debt of Indian corporates, as well as the exposures of Indian banks to dollar-denominated offshore loans. How vulnerable are Indian companies to a rise in the dollar? And so I have some concerns relating to that in the context of the stock market, and I'm perhaps not so positive or purely on this account. I have many questions, but okay, I'll just ask those 2. Yeah.
Thanks, Vikram. It's an interesting question. If you look at the total government expenditure as reflected in the budget to the total GDP, you'd find an increasing trend over the last 10 years. The government budget, what we are talking about, Mr. Jaitley's budget now accounts for maybe 8 to 9% of, if I use the word GDP instead of that, if I replace the word of the total economic activity in the country. It was, when I was there, it was 12%, it's 8%, it's 50% less. So naturally, and I'm also arguing that the cash economy is so much more. So the ability of the budget to leverage major changes in the Indian economy is going down year by year, which is true of the American budget, which is true of the Australian budget, which is true of the UK budget. And I think this is of course, you call it a sign of development or whatever it is. I think the sheer numbers, you cannot move a very big stone with a very small lever. Second, what can be done about agriculture and services sector which are not addressed in the budget? A lot. If you just recall, the big growth in services sector in the 99-2000 started off by 2 or 3 simple concessions. A huge income tax concession and an investment concession for the IT sector. Whether you are that is okay. I used to argue that how does it make sense that a person doing a call center in a call center is more important than a person manufacturing, let's say, automobile parts. But okay, the call center got the IT breaks. Okay, so the IT sector grew and grew and grew, matched by state concessions on land, state concessions on government concessions on SEZs, etc. A huge boom, and that boom is sustaining I would say, educated employment substantially even today. Agriculture, the push towards an increase, you see, the MSP has been increased by nearly 50 to 60% in the last 5 years. There's one thing that the previous NDA government did not do, again neglected agriculture. And the UPA government came in and started, okay, it raised rural wages. It raised rural incomes. Much more important, raised rural consumption. Enormously it raised rural consumption. So, which is what Mr. Jairam Ramesh talks about. He says, please go and see tier 2, tier 3, tier 4 towns in India today. Have they not gone much faster than your big metropolises in the last year? And he says that's because of us. We've done that. Now you have put a cap. You have put a cap on this because you think that this is too expensive. That the food prices going over the roof is a result of these kind of decisions. Okay, right or wrong? I'm not even arguing right or wrong. I'm just giving to you two sides of the argument. The second part that you asked about, yes, if interest rates, okay, let's say if I am a corporate, if I borrowed in euro, I wouldn't worry. Okay, I don't expect the interest rates there to go up fast. If I borrowed in dollars, I would worry, because if interest rates are going up, I can't even swap. I can't even swap my old debt for newer debt. It's going to be more costly. So I would call this not a macro phenomenon, but I would call it a more company-wise phenomenon. But in the last 5 or 6 months, as in you and I are talking, I think corporate boards have already factored this into account. A lot of them have rolled over their debt in the last 5 or 6 months. So when they saw interest rates are likely to go up in the future, they have taken advantage of the lower debts. A lot of them have rolled over. Foreign debt as a percentage of total debt, okay, it's a bad number because total debt has been increasing so fast. But as a percentage of total debt is actually falling in the last 2 years. All right, so you can sit back and say my GDP is so big that this percentage of foreign debt does not matter. But you're sitting in a particular corporate boardroom, then it worries you a lot. So I would say this is a fragmented answer. Yes, certain corporates would be free of it. There are companies which are zero debt companies, a lot of companies. There are companies, let's say companies like Infosys, Wipro, etc. are huge cash companies, plus cash companies. Even Reliance is a zero debt company, practically. So the stock market, unfortunately, it's a very shallow stock market. About 30 to 50 stock determine the Sensex. And that's why I said that, okay, this sentiment will continue.
Yes, please, the next questions. Surya?
So many years ago, it used to be said that defense expenditure is a drag on India's economic development. But I don't hear that kind of argument any longer. Is it because the budget of the government is just a fraction of the GDP, or is there some other reason?
No. Defense expenditure was considered a drag for 2 reasons. The substantial proportion going to manpower, that is just victuals, food, salaries, etc., and the huge imports, okay, 70% equipment getting imports. You have a government now which is turning it around and saying, no, we will manufacture here. In fact, most of the big orders have been given to local firms. So in a way, if you give an order to the local firm for manufacture, then okay, you are only promoting manufacture. So it would have its own downstream effect, it would have the smaller guys, it would have the, I mean, you have a big tank, and it would have the smaller light engineering industry going up, you have the forgers, the casters, whatever it is going up, etc. So this is a very big change. So the announcements that Mr. Jaitley has made after he has become defense minister would certainly contribute to manufacturing in India, and not just in the big defense companies, but all the ancillary companies. I mean, I can see BHEL, which 8-10 months ago was totally devoid of orders. getting so many more orders now. And this will convert itself into downstream activity by the end of this year. Yeah, substantial.
Yes, please.
Sir, manufacturing, labor has been contracting for the last decade. Availability of labor. Let's not talk about the quality or productivity of the labor. With MNREGA getting squeezed, with the services growing, with agricultural getting, ultimately it has to get more mechanized. Can manufacturing really progress without availability of labor, and what's going to be the impact on future capital formation and growth?
This is what Mr. Raghuram Rajan is also saying, that I think that you are looking at exports, you are looking at manufacturing India, you are barking up the wrong tree. Again, it's very difficult to give a one-line answer, but I can think of at least 7 or 8 different sectors where manufacturing India will grow. Okay, let us take a sector like automobile manufacturing, and therefore auto ancillaries, light engineering, like say forgings, castings, etc., right down to electronics, etc. You can't stop it. So long as Indians drive cars and so long as you are selling close to 1 million motorcycles a month, you can't stop it. This will continue to grow. You look at the pharmaceutical industry, the debate is about M&A and others, but whatever it is, local pharmaceutical industry, huge export oriented, you cannot stop it. You look at the entire, the plastic the PTA, LTA kind of chain, the kind of consumption that is taking place in plastics, etc. Again, you cannot stop it. It will continue to grow. You look at textiles, there are kind of homegrown textiles which will continue to grow. So I can think of like this about 8 or 10 sectors which would continue to grow, and maybe we should focus on that. Maybe we should not focus on saying, can I make computers, can I make voice recorders, can I make electronic equipment, etc. Can I look at the kind of things which I'm good at? Why, tire companies are expanding like nobody's business. I don't know who's going to buy so many tires, but everybody is doubling. Paper companies are doubling. Cement is down about capacity utilization 60 to 70%, but that is just because real estate has been down. So steel is down again because real estate is down, construction is down. So yeah, I think what we do not do and what I would like the finance minister to do is to look at and say, these are my 20 areas which are my strengths, which will never go away. So let me put money into this, let me give them incentives, let me remove excise duties, let me give them all that they require, let them bloom. And the others, they can fend for themselves. Yeah.
Often ignored about the automotive industry is that 65% of material content is imported in one form or the other. In electronic components, steels, paints, chemicals. And for the automotive industry to grow, which undoubtedly it will, and I share your views. I sit on the board of a couple of automotive companies, tier 1 companies. But still, the issue of capacity utilization, capital productivity, and labor availability, this is not going to go away. How are we going to address that? The second question is, tire industry, I sit on the board of TVS Sri Chakra. Dunlop is closed, therefore they are booming.
No, but JK is, I met Mr. Singhania last week. He says, I am doubling. I met Maraf the other day. He says, I am doubling. All right. So, labor skills productivity is a problem that's not going to go away. Okay, there are no quick answers to that. That's not going to go away because it is real. That kind of skilled labor ready to work in manufacturing units is just not available anymore in abundance. Government is saying I will do a skill upgradation program. Government is saying so many skill development. So many private sector people. So many Mr. Premji is saying I'll do skill development. Mr. Ramdore is saying, let's see. I don't have a clear answer, but yeah, it is definitely a problem. Definitely a problem that will remain. The one last thing which I must say, which is right at the top of my mind, is that there is a very big difference between increasing difference between the southern part of India and the northern part of India. Increasing. in the last 8 or 9 months is something I have been seeing, is that there are at least 10,000 startups in Chennai, Bangalore. Chennai alone has about 6,000 startups. Chennai, Bangalore and Hyderabad. And 20-30% of these startups have already been funded. How have they been funded? Because all these big guys, Mr. Narayanamurthy and Go, have sold nearly 7,000 crores worth of shares. And that they are ready to put it into this funding. So has Mr. Premji has promised 17,000 crores this year for this kind of thing. So there's a lot of venture capital money which is available all suddenly. And particularly, I think it has happened after that Flipkart thing. Everybody's got up. So now you are going to see a kind of a change in industry, or change in I would say, what do you call it? Don't call it industry. What do you call it? You're going to change of entrepreneurial activity, which is going to be so different from what the budget is going to be talking about. And this is real. This is real.
We have time for more questions.
What do you see about GST?
GST will come. That's what. But the kind of, I mean, forgive me if I say that the kind of bill they have put is a bit of a mishmash. But it's a kind of a, it's all right. It's the best they can do. But it'll come. It'll come. It'll come.
They get the states on board and then squeeze on them.
Yeah, that is what I think they are planning to do. They'll say, okay, it's kind of a camel and tent business. So they're trying to put the tail in first. Let's see how it goes.
Vikram, you wanted to ask a few more.
I read, I think, in the Business Standard a few days ago that India is looking at new sources of growth, new industries, new things that have not been done before. I mean, not separate from the entrepreneurial activity that you're mentioning. I think one of the points made was that it is not going to be electronics. That is not India's comparative advantage. But it could be things, different forms of energy. It could be defense, production, and other areas. Do you have any knowledge of what the new industry sources of growth that India is looking at?
No, I mean, there are only two big new things which are going to happen in the world in the next few years. One is with the enormous amount of shale gas and gas available, with the oil prices down, going to be a huge push into petrochemicals and new products. Okay, new products, meaning things you and I haven't imagined before, into plastics, into, I would say, shirts and pants which speak and which measure your medical fitness as you walk, or whatever. And I think these are just round the corner. The second most important change that is going to happen, and that is going to be storage. What is storage? Because the problem with both wind turbine and the solar energy is the ability to keep that. Okay, the quality of storage, whether you start from a simple phone right up to large generation equipment, the quality of storage is very poor. So the big technological breakthrough that's going to happen is in storage, batteries. Okay, where is it being driven? It's being driven out of Israel. To some extent, it's being driven out of China. All right. Where is the petrochemical change being driven? It's being driven out of US on the northeast. It's being driven out of Germany. Two places happening. All these guys have home centers, research centers in India currently. Okay. So these will be the totally new things which you would see.
The low oil prices, is India using this opportunity to build up a strategic petroleum reserve?
What they are doing now is to build up their bank balance. They're thinking one at a time. They say, okay, they put up the excise duties, they are very short of revenue, they're putting up the bank balance first. Yeah.
sir. Any questions, bro?
Thank you. The name is Sajeev Thomas. The oil price again is a big boon to India. I read a number of that we should see a reduction in our import bill of close to about $50 billion, which brings us close to, if not a surplus in our trade balance, close to being balanced. How would that flow through into the economy, and what do you think will be in the budget in anticipation of that?
You know, what people don't realize is we have 168 million tons of refining capacity. We consume 100 million tons locally. So we export products of 40 to 50 million tons. If oil prices fall, product prices fall. We get less in exports. So, yeah, it's a big negative for us. In fact, the largest component, as Amitendra will tell you, largest component of our export earning is petroleum products. That's going to go down.
The number that was bandied around some of the publications was that it was 6% of our petroleum imports, net imports, 6% of GDP, which is significantly higher than China, which is around 4.5 to 5, and the US is now down to 2%. Do you still think it will be a negative for us?
I don't know these numbers. But what I worry about is something slightly different. I believe by the next year we will be importing 300 million tons of coal. All right. So whatever happens to oil.
But your point about re-exports is very valid.
Yeah, I think if we don't have any more questions, we still can continue the discussion over tea and biscuits, and that I think will be sort of most welcome, and we encourage you to please stay back and have this discussion continuing. So on behalf of all of us, I take this opportunity to thank Dr. Narayan for sharing his perspectives with us, and we hope that each time he comes back to ISAS, he can bring back to us new insights on a variety of issues. We always benefit from those, and on behalf of ISAS, thank you all so much for sparing your afternoon here today. Thank you.